presentation made by a lawyer, who I am, but I am doing my best to talk about other general agenda, in this case business aspects, and not to stop with the legal with the legal agenda. So let me now go to my presentation and to introduce myself. Finally, I am the managing partner of Morawski & Partners, law firm based in Warsaw, Poland. We generally deal with assistance to foreign investors into Poland. So we deal with FDI, but we also help businesses from Poland and elsewhere to expand internationally. And today I am going to talk about business and legislative conditions under COVID-19. What's interesting is that this time of hardship is creating not only risks but also opportunities, and this is something that I am going to discuss. Let me go to my first slide. My first thoughts that I'd like to share with you is that we are currently facing a great information noise. Every day we hear lots of pieces of information which is often conflicting, and even if it is consistent, then there are tiny pieces of information that are difficult to put together to make a consistent picture. Here is latest example. These are articles from Financial Times just from yesterday. One title says that we have a record price for gold. The first time since 2011, it's reached $1,800. Another one says that Brooks Brothers files for bankruptcy, and Brooks Brothers, if someone doesn't know, is a very famous brand of shirts, famous for delivering shirts to the US presidents. And it seems that Mr. Trump is busy working from home and has failed to order new shirts from Brooks Brothers. But on a serious note, we hear a lot about bankruptcies these days. And we also hear about unemployment. So here is another example. United Airlines is planning to lay off 36,000 staff. You will understand quickly that these are all news that can be easily categorized as negative. Even that title concerning gold, for many people who have been surprised by this current crisis, and most people have been surprised, so they do not have enough savings in gold. They could treat this piece of news as negative. And here is more. This time on a more positive note. Daimler says that it is starting a recovery. So says the CEO, even though he is criticized by shareholders, but for other reasons. The most important news here is that Daimler is saying they will be recovering from a very dramatic change of the market. And Wall Street banks, even though they're not making money from stock investors, they are now busy charging their fees to the lenders and those dealing with fundraisings. So these are signals that despite the crisis, the economic troubles, companies and service providers are finding new ways. having said that, the overall picture is rather grim. In Eurozone, Bloomberg says that the general consensus from various agencies dealing with forecasts, the general consensus is that GDP across Eurozone will fall by 8% in 2020. But if you try to look a little closer at Europe, and if you look at various countries, you will see that even in the times of a pandemic, even in the times of a global crisis, there are countries which are faring a little better, and there are countries which are faring a little bit worse. And of course, it's a generalization, but there is much truth in saying that, generally speaking, the Eastern Europe is doing better than the Western Europe, and the northern parts of the continent is doing a little better than the southern parts of the continent. So if you're thinking about your investment strategies, you should always look into details, not just at the general picture. This is the look of the forest, and this is the look of the trees. And if you look even further at the Eastern Europe, you will see that there are differences between such countries as Poland and Romania on the one hand, and countries such as Moldova and Montenegro on the other hand. There are strict reasons for this, and this is not the place to discuss them all, but generally you can say that the region of Eastern Europe is faring a little better than the region of Western Europe, and this is the reason why you should be looking closely to this part of Europe. There is another reason why the picture of the current situation is not all grim. The liquidity measures and various programs of indirect and direct funding across Europe have amounted to almost 4 trillion euro. It is a very complex picture of all these programs. The European Commission have published a presentation discussing programs available in all EU countries. And this document takes up 100 pages, and it tells you how difficult it is to discuss various types of schemes that are available in each of the EU countries. Generally speaking, these programs can be divided into 2 types. One type is about liquidity. So there are a lot of programs consisting in providing loans to companies, and the main purpose is to bring more money to the market. The same thing is happening in the US, by the way. President Trump has signed a so-called CARES Act that does exactly the same thing. It provides more money to the market. And some of these programs, here I'm talking about the second category, consist in direct funding for the companies. So there are programs which are consisting in grants. Sometimes you're talking about mixed programs. Some loans are provided on a with an option of becoming a grant. They are easily forgivable. if you can put it this way. That's why it's sometimes difficult to define precisely one particular instrument as a liquidity measure or direct funding. A loan can be forgiven, and then it becomes a direct funding instrument. Here are the risks that we have identified as a firm based on various conversations with the client. Of course, the MAN transactions are down. We have found a source which says very specifically that in the first few weeks of 2020, at least these largest deals in the market are down to the levels from 10 years ago. Of course, the real estate market has come to a standstill. In the UK, they have measured that in May 2020, it is 52.4% lower than in May 2019. We, among these pieces of information concerning the real estate market, we see a green light. When it comes to commercial property, there is one sector of the market which has also come to a standstill, but at least all the forecasts are saying that it will, when it finally starts to move, it will be the real estate sector to go to when it comes to new investments, and that is the warehouse sector. Let me tell you in a little while why we believe this to be true. When it comes to stock markets, a very interesting thing is happening. Everybody is taking for granted that the stocks are plunging, the markets are plunging, but here it is actually far from clear, because after a real dive in March, between April and June, the stock markets have gradually recovered. It is only at the end of June that most of them they fell again, and this is probably due to the talk about a possible second wave. And with regard to Forex, we see a lot of movement here. Because, of course, those companies or those investors who have most of their holdings in currencies such as the British pound or various currencies of the emerging economies, the Russian ruble or the Polish zloty, they are worried because these currencies are generally losing ground. But the exporters are very happy. The merchandise that they're dealing with is when it is being exported, it is becoming a hot commodity because it can be sold at lower prices. And finally, bankruptcies mean two things. Companies in trouble mean two things. One thing is, of course, that there is a more hardship out there in the market. But another thing is that there is companies out in the market which can be purchased in M&A transactions at relatively discounted prices. And finally, there is a great demand in the market for loans. A company in trouble, the first thing that it does, of course, it is looking for a loan. And for all these reasons, exactly the same factors that I have categorized as risks, I have at the same time categorized as opportunities. As Warren Buffett said, you should be fearful when others are greedy, and should be greedy when others are fearful. This is the statement which I relied on when preparing these two slides. When you talk about these phenomena, you can easily see a risk or an opportunity. And this is why it always is important to look at a particular problem from all angles. Finally, let me put my legal cap on and let me explain how the legislative picture has changed. One thing that I've already mentioned, that is the liquidity programs and direct funding. It relies on very significant legislative changes. If 3 months ago, anyone had asked me if it were possible for the governments to create a number of programs granting companies loans and even direct aid, I would have said that it is really not the time, the moment in which the economy it is not the time for the government to create such programs. And here we go, 3 months into this global pandemic, and we don't have a European country, and I will not discuss this phenomenon globally, but of course to that picture you can easily add such countries as the US, Canada, Australia, New Zealand. All of these countries, they have created such new legislative changes that have made these programs possible. What is changing in the regulatory sphere? Formally speaking, not much. We can talk later during Q&A with the expert that we have here, with Charlie Wilcox, who I'm sure will confirm that on the regulatory front, there is no revolution. The European directives that have been adopted a long time ago, they are being implemented, and that's all. But what is changing is the new energy that the governments have found trying to implement the instruments that so far were being implemented formally, but they were not being relied on in the daily government policy. Well, today, the enforcement of various instruments available, the AML, the anti-evasion and fiscal policies, these activities of the governments can be easily seen. The governments are busy trying to identify all loopholes that exist, which mean the loss of money, which is so much needed in the current crisis. And finally, a number of tax reliefs and postponed obligations also is a new phenomenon. This is something slightly different than the liquidity programs and direct funding. Tax reliefs simply mean that certain tax obligations can be postponed, or certain tax liabilities can be forgiven for a certain time. And this, of course, has meant a lot of changes in the legislation. So here we come to my final message. This is, of course, a very well-known quote from Warren Buffett. And I would like you to think about this message when you consider your investment strategy. Isn't it the time to invest your money in those economies where you can find interesting deals? You can think about an M&A transaction. You can purchase a profitable business. You can think about an interesting property, whether in a tourist destination or in a city, which would be treated purely as an investment. This could be a good moment. And where to look for those opportunities? Well, there are, of course, different ways of going about this subject. But one point of view that I would like to share with you relies on my personal experience. Throughout the last 20 years, I have assisted foreign investors working mostly in Poland. As I said, I've also worked internationally, but my main focus is working with international companies or individual investors, foreign investors working in Poland. And believe it or not, I have not seen one project which would be a project which would be channeled in a traditional way, that is with all the business attention that is required. I have not seen one project fail. Poland is an emerging economy, and it is developing at such an amazing pace that and notwithstanding various volatilities of the market, a lot of traditional investments that have been happening in Poland, they have produced incredible returns of investment. Currently, I still have on my desk investment projects which are more risky and therefore offer 20% return on investment annually, and very traditional investment projects which offer the rates of 10% of ROI annually, and these are the rates that are really hard to find in the Western world. And these are really relying on very solid data, which have not changed dramatically, even in the times of crisis. I would strongly recommend you to think in your investment strategies about traditional kinds of investments, which perhaps earlier have turned out too challenging, too capital consuming. Well, these days you can really expect bargains out in the market, and this is something that is worth considering. Thank you for your attention.